Vepe, my guys, welcome to my show. This is Sam Show. Hapa hivi, that is where we learn trading. So most of the guys will niambia, I've started trading, but I've not shown them the ways. So for now, this is the first lesson as a beginner. This is what I'm showing. What is Forex? What do we do in Forex? And for those guys who don't know anything to do with Forex, I'm going to show you in this video, manze. Make sure you subscribe, like, and comment, manze. Subscribe. I need that subscription banner. So guys, I'm sure I've been all good. And first thing I want to tell you guys, on Friday, something happened to gold. And because of these clashes between Israel and what, they have affected trading. So guys who are on the right side, they made a lot of money. There's some guy of mine who made around 62 million months, just like that in Forex one day. So guys, I want to motivate you guys. Make sure you enter this thing. This is the only thing that is bringing money, like in this country, guys. You know, transfer rates are very high, so if you make even if you make $10, that's around 1,500 months. That's good money. So guys, I'm going to show you what's all about Forex, eh? So let's see. Let's open, guys. Okay, now we go to Forex. I don't think you need to see me. Okay, now here we're going to enter we are going okay. Now this is the Forex. Forex means the foreign exchange of foreign money. Exchange of foreign currencies. So that's, you see the word foreign divided into two parts. The first part is for, and X is for exchange, for is foreign exchange, and this is for beginners. So guys, I want to show you what is Forex. We jump to where we start by why do you love Forex? Forex, you can just make, like you can see, until the early 2000, it was not possible to trade Forex unless anything else than less than 10,000. But I told you in my previous video, you can see that I told you even in Excel you can trade with even $5. You see, but now you can make money when you are lying in a hammock. When you are you can use it as a side hustle. You can just chill there and make a lot of money. No crisis, no tax the way. That's one good thing I've seen with this Forex, unless you are taxed by your M-Pesa or your bank, but they don't tax you directly. So how to trade if you're a busy person? So guys, if you're a busy person, first of all, the first step is to choose a platform. We chose Meta Trader 5, and guys, that's the international company. And then I told you the broker which we'll be using, that's an XM broker. I showed you how to open an account in XM, and guys, I know you guys, you open an account. So now that's the first thing you should do. The other thing, you follow the top traders. You can follow my trades, what I do. You can follow XM also gives you signals. You can follow their signals, and I'll be giving you ideas in the next video and live video. So for now, I just want to open an account. You guys, you opened an account. I just want you to learn what is Forex. You can copy their trades, you can learn and make profit. So these are some of the terms, and I want to define them for you. There's something called a leverage. Leverage, which is represented, it represents a margin trade ratio. That is like 1:1,000. That means if gold or any currency that you are trading if it moves by 1 pip, they are going to put a margin of 1:1,000, or maybe 1:2, or 1:30. So that shows if it moved from maybe 1888 to 1889, that's a 1 pip. They are going to use that ratio 1:1,000, so it can give you that money. And then okay, let me read for you. It enables traders to borrow a certain amount of money. You can be credited, especially in XM guys. XM, they really help you, because if you deposit like $20, they are going to give you $10 for credit. They give you that because they are trying to make your account much and much big. Like inakuwa kubwa design, unaweza trade even with small amount. Okay, leverage allows one to trade using more money than the one they have in their account. I've just told you before, they add some more money in your account. That's a credit. Therefore, you are leverage, or your account balance, to place a bigger trade here. And then there is something called a pip. A pip, it is called price interest point. Represents the smallest change in a currency pair. If 1 pip indicates like, okay, let's use this Euro USD. This is one of the combination, like it's a Euro versus US dollar. If 1 pip, that point is like this price was 1.2302, and then it moves to 1.2303. That's a difference of 1 pip. You see, that's a 1 pip. Typically, it is the 4th decimal point, although many brokers quote using the 5th decimal place. However, the decimal doesn't really affect the price, because it changes really quick. Yeah, so they use the 4th decimal place. And then the currency pairs that include the US dollar, a pip, 1:10,000 over dollar. Whereas when the currency pair include the yen, 1 pip is to 100. So this pip really changes with the type of currency you are using. If you're using a yen, that's a Japanese yen, they use a 1:100. If you're using a US dollar, they use 1:10,000. If you're using gold, it is very different. They use 1:1,000. And if you're using Brent cash is a crude oil. That's a commodity. They use 1:10. So guys, so if you that will make you understand which type of currency pair will you use. Because in Forex market, there is a Forex. You must know there is Forex. There is a commodity exchange, and then there is indices. Indices, they are like stocks. And then commodities, these are gold, silver, and crude oil. Gold, silver, crude oil, and so much. I don't think you need to see me. And then we can go to the other thing. We have spread. What is spread? So guys, I want to show you. I want to tell you, if you're going to trade, you can see in the graph there is 2 lines. The first is called the buy line, and the other one is the sell line. If you sell, they are going to sell at the lower, and if you're buying, they are going to buy at the higher. This is the spread. This is how those brokers make that money. Because so guys, as I was saying, spread is the difference in prices. So in Forex trading, or maybe commodity trading or indices trading, brokers quote the bid and ask price of the currency pairs. The bid is the price that trader can sell the base currency, while asks the price they can buy. So you can see, okay, let me show you in my today you can see it. So guys, that is what a spread is. So let's go to what is Forex. Forex, in Forex market, 5.3 trillion is traded daily, making it the largest and the most liquid market in the world. So that's why, as I said, this is the only thing you can make a lot of money. Because in Forex, the trade of Forex occurs between two currencies, because one currency is being bought and another is sold at the same time. So as I said, Euro versus USD. This is a Euro. This euro is a Euro currency versus the US dollar. So every time they are exchanged, bought, sold, they are bid. You see, there are many measures. You can use Euro USD, GPB versus USD. This is the Great Britain versus US dollar. There is a US dollar versus Japanese yen, US dollar versus Swiss francs. CHF is a Swiss francs. That's a currency used in France. Euro versus Japanese yen, US dollar versus Canadian dollar. That's the card. Then paper, the points, as I told you, there's a difference between, you can see 1.2302 moves to 1.2304. That's the ask price and this is the selling bid. And then the difference between this and this is called the spread. And this is a 2. As we say, these are 2 pips, 2 points. That's the difference between 4 and 2. That's the pips. And then this is the spread between the selling price and the buying. That's the spread. So guys, if you're going to use any broker, you make sure you understand about the spread, because some of the brokers, they put spread at a very, very high cost, making it you make a lot of losses before you start making profit. So as I told you, XM is the best and the best. Okay, how do you read currencies? This is the Euro. I'm sure you know about this, because this is the Euro versus USD. Currency are traded in pairs as their value is relative to another. So when you hear about Euro USD, it means Euro, how much is Euro to US dollar? You see? Because every time, okay, for now, Euro is more expensive than the dollar. So you find Euro is on the upper hand, because if you make this means that Euro, how many dollars can buy Euro? And here it's 1.1302. You see? So every now and then they really change from 1.133, they move to 1.14, 1.15. Those are the pips. They are going to, that is how you make money. You can buy it at 1.1302, and then it moves from and then it moves to 1.1315. That's a difference of 15 minus 2, that's a difference of 13. 13 pips is around $13 if you use our standard account. You see, that is how you make money. That's not very hard. Use this, and then this will move to buying. And then it is, if it is selling, you can see that this is a 1.1302. If it starts to go down, you are going to sell it. If you sell it and then it moves to 1.12, maybe 8 something, that's a profit you have made. So guys, this thing is not hard. And then we can move. These are the measures, as I told you. Measures, they are a lot. And then how leverage work. I told you, leverage Forex is all about entering and borrowing capital into transaction. As I told you, if you invest $100, they give you, maybe if you're using a leverage of 1 times 20, they give you 20,000. And then if you're using a leverage of 1:100, they give you 20,000. You see, 2,000 and 20,000. This is a change in value, and then change in value, and then you make, if you make a profit, or if you're using this, if you're using this of 1:2 times 20, leverage 1:20, then they are giving you 2,000. You can only trade $2,000, and then if you're trading 2,000, you make a profit of 6. And if you're using this times 200, you make a profit of 60. So leverage is very, very important, because it is going to make you make a lot of money. That's why I told you XM. Make sure you use the XM. XM, they have the best leverage, because their leverage is 1:1,000. If it is 1:1,000, you have deposited $5. So $5 times 1,000, you will have the position size of $5,000. That you are going to make good profit. Tips and warning of leverage. The first thing you have to know, if you are trading, keep your losses within manageable limits. Manze, this is the thing that kills people in Forex. You just go, you trade, you don't look at the trade, and then it goes the other way around. If you cannot manage limits, let me tell you, trade will fuck you up. You make sure you put the stop losses and other strategic stops. So if you feel like this trade you have put, okay, your strategy, your analysis told you that this trade is going to buy, it's going to bullish, as in it's going to rise, and then it starts to lower, and then you understand that it has changed the trend. Make sure you stop that loss, because if you don't stop it, my friend, it will continue minusing your money until your account is blown. When do you think is the best time to trade? The best time to trade, guys, it's you can see, let me tell you, according to hours, these are the hours that these are 24 hours a day, which are the best for trading. First, if you're trading between 1 o'clock, 2 o'clock, okay, the trade opens at 2 o'clock. If you're trading between 2 o'clock, 4, 5, 6, 7, 8, like early in the morning, 5 o'clock in the morning, like this, this is not the best time to trade, because as you can see, the time is slowing down, like there are no huge movements, many people have not started trading, so it is very, the trade is very slow. And then if you go to like around 11, so from 10 to 11, that is we move from Tokyo, we enter the London market. So early in the morning they're using the Sydney market. We move to Tokyo. Sydney and Tokyo, they are not very huge, they don't trade mostly, and then we can move from Tokyo to London. That is where around 11 the trade starts to move with very, very many tips. So if you analyze from the morning and then you put your trade at around 11, you're going to make some money. So guys, and then after that you can look for the London around 12 to 3, there's no movement. But guys, if you want to make money from around 4 in the evening, that is where the trade is very violent, very violent. So if you buy, it is going to make you a lot of money, and if you sold, it is going to make you money. That actually, this is the best time to trade. So guys, if you know you want to trade, make sure you trade around 4. That is where you make some money, because they are moving from the London to the New York. So between the London and the New York, that is where trade is very violent. And then guys, so the best time, and then if you want to trade, make sure we don't trade on Saturdays and Sundays. Monday is not a good day to trade, because you don't know where the trade will start. Maybe it can start by buying, or it can start by selling. So Tuesday is a good day because it stabilizes, and then on Friday is a good day because it is trying to close the week. So if it was buying, it will buy so and so and so further and further, so that it can close a trade at very highest point, so that next week it can start at high point, lowering down. So guys, make sure you understand that. And then yeah, let's see, why not to trade Forex? First of all, you cannot trade on bank holidays. Asian sessions are not good. Friday afternoons and weekend, they are not good. When they are releasing a new event, make sure you close that trade. Overnight, by the way guys, this is something that have fucked me up. Never leave a trade open at overnight, because one, if you had bought and then it start to sell, maybe you left it at overnight with negative $2, and then the other day in the morning during Sydney hours they release a news and you are just asleep. My friend, you will find your account blowing. So don't leave a trade overnight. Don't trade when you are very angry or frustrated. That means maybe you have lost. You have lost around maybe $5, and then you start like, I want to regain that $5 with angry. No, don't do that. They are going to fuck you up. And then don't trade at the end of December. Trade is very violent. It can turn any ups and downs. That is you That is when you see it buys with a lot of pips and then sells with a lot of pips. So don't try to do that. Okay, what are bulls and bears? If you have heard about bulls and bears, bulls and bears, bulls means that trade is going to what? It's going to rise. That's why you see a bull. You think a currency will rise, you buy the currency, you open a long position, it's a bulling. And then if you feel your currency is going to fall, then you sell it. This is called a short position. So guys, if you feel like let's go short, that means we are going to sell that trade. So guys, make sure you understand that. And then if you're going to buy, make sure buy, it's a bullish. So guys, you can look at the trend. If you're going to trade, look at the around 1 month time frame, and then you understand if this currency is going to buy or is going to bullish, and then you can know when to sell and when to buy. So guys, I was telling you about this bullish and bearish, and then we can move to okay, this is a bearish candlestick. If you see a candlestick that is red, make sure you have to understand that that's a bullish. Other bearish candle, that means that coin it's going to sell. And the bullish candle is always color green. So bearish trend is a downward trend, but bullish trend is an upward trend. Okay, let me go to another one. How to react in chart. How to read charts in Forex. How do you read the charts in Forex? A line chart, they are line charts, they are bar charts, and then they are candlesticks. For me, I love using candlesticks because they are going to show you, like this candle, it's a bearish, as I told you, and the green one is a bullish. So anytime you see these, make sure you understand like what they mean. So when you move to like let me see the line chart. This line chart is showing you, as you can see, this line chart is going to show you this thing is going down. This is a bearish, and then the moving up is a bullish. You don't have to know more about that, but I really tell you before, I really advise you to use these candlesticks. Like the candlesticks are the best. If you are ready to understand this, when it's moved from red to green, it makes something like a Dodge man, then it will start moving upward. That shows that it's a bullish signal. And then if it makes a hanging man, this is a hanging man, it moves then to bearish. So it's very easy to learn these candlesticks. I'm going to show you in another video how to read this candlestick and how to know if this currency or this Forex is going to rise or it's going to fall. Okay, I think that's enough for today. Thank you for your time. Make sure you subscribe, hit that button, like, share that video. Let us mobilize people to enter in the Forex market. As you can see, this is our broker. We are going to use this, the XM. Make sure you go back to that video, my previous video, learn how to make an account, and then the next video I'm going to show you guys. Now we are entering the real trade. That is where we are going to open a MetaTrader account and log in our broker account into the MetaTrader so that we can be ready to start trading immediately. Thank you guys. Thank you for your time. Make sure you subscribe and share that video. Make sure by the way, if you have any issue, comment. Make sure you comment. Thank you very much. Thank you very much.